Hi, everyone. This is Rob Roy of Elliott Wave Options, and welcome to TradeFinder Live. If this is your first time attending TradeFinder, welcome. Glad to have you. If you've been here before, you kind of know the drill, but for those that are new, let's go through real quickly this process of going through TradeFinder. And as you know, if you've seen any of our videos, we have to show you this disclaimer. It is a requirement and is important. Please take a screenshot of it, read it in detail at your leisure. If this by chance is the first time you've seen it, a couple of things that the powers that be want us to make you aware of is number one, we are not registered to give individual investment advice in the United States. And number two, because we have a lot of international viewers, any pricing that we're talking about is assumed to be in US dollars. So with that said, go ahead and move forward with how TradeFinder works. We'll go through and talk about the markets, not just our market anymore, but with all our international viewers, we get asked to look at some markets around the world. So we'll do that. We'll review a case study for our alert subscribers, give you an idea of how our alert service works. Then we'll look at a review of our weekly case study considerations identified in each one of these trade finders, any that may consider to be open, but with the trade finder, we just go through and identify a consideration, then you're on your own from there. But we do highlight them and say, hey, if you're still in this, maybe you're getting greedy at this point in time, et cetera. We'll cover those. And then with whatever time's left, at the end, we'll do a general Q&A, which usually amounts to you guys giving us some of your favorite stock symbols, and we take a look at what our indicators may have to say about your favorite symbols. And that's it. That's how TradeFinder works. So again, welcome for those of you live streaming on YouTube and elsewhere. Welcome to you as well. Let's go ahead and take a look at the market itself. So if we look at the SPY, you can see that we did move to the upside today, which was important because we moved past that 460 level. And if we go back and take a look at the weekly chart, if you may remember, if you have been watching our SPY videos some months ago, literally, we talked about a support level or resistance level, target level of 460 on the SPY weekly chart. And there it is right there. You can see the target price of 460.29. And so we're there, closing at 461 today. So where do we go from here? Well, we've had a number of...
Sorry to interrupt.
Oh, I didn't change the screen. All right. Still trying to catch up with technology. Well, there we go. So that should show you the current screen. Yeah. And
we've got it now. Thanks, Rob. Got it now.
All right.
There's a, yeah, that's it.
Yeah, my fault. I got to continue to remember that. All right. So there's I went back to the daily chart. There's the level there at breaking above 460 in today's market. And then I was showing the zigzag pattern going back and encompassing the entire wave 1, 2, and 3 of this current 5-wave impulse pattern that gave us a 100% extension, which was an extended level. 61.8 would have been the target. So 161.8 is a double extended level, if you will. But we have to look at that as the next potential point that the market could go. Now we're just barely above 460, and these targets, it usually hits the line, as they say. But could we overshoot it a little bit and then that be the end of the run? Yeah, absolutely. So what we do at Elliott Wave Options is when we get to a level like this, especially when we're already in an extended level in the zigzag pattern, and some of you on YouTube had commented about this 460 target level, we look at our confirming indicators to see if there is support, if you will, from our technical indicators in addition to Elliott Wave to show a potential move to another extended level. And if you take a look at this, man, we've been talking about this for a while. It's kind of mind-boggling that we made it this far, because as the market has continued to move to the upside, as I noted in our last SPY update, on YouTube, the ADX has continued to move lower. Remember, the ADX is a sign of strength. The two directional indicators tell you who's in control, buyers, sellers, buying pressure, what's leading the other. But the ADX, the black line there, is the sign of strength of the current trending move. And it's just gotten weaker and weaker and weaker as the market has continued to go higher and higher and higher. So we're diverging as we go. How far or how long can this divergence last? I mean, that's a big question. And I don't know is the answer that I have, because I'm a bit surprised that it's happened for this long, that it's occurred for this long, that the market has continued to diverge like this. It's a pretty long time. So we'll have to wait and see if we can maybe turn the ADX back to the upside. If you look a little bit down there at the bottom, you might be thinking, well, it's kind of trying to turn back to the upside. We did get a positive crossover, the positive directional indicator crossing above the negative there. The ADX is trying to turn back up. But for us, for it to trigger a signal of some strength returning to the market, the ADX has to break above that negative directional indicator and above 20. So we're not there yet. So just this little curl to the upside isn't enough, nor is this crossover between the two directional indicators. The most positive thing you could say is that, well, it's a little vertical, the cross, which is what you want. Normally, I don't like vertical moves, but when you're looking at the DMI, the more vertical the crossover, the stronger the signal. So from that standpoint, with buying pressure in control at this moment, that looks pretty good. But we're not there yet as far as it giving us some sort of a trigger signal for the market to continue to move higher. But hey, in a week or two, perhaps it does. And the market on the daily chart could continue to move higher from there as well. Another thing that we want to look at, and going back to the daily chart, is taking a look at the 10-day moving average. And if you look at that, you can see that we are a little bit overbought now with today's move in the market. A little bit of separation there from where the market is in the 10-day moving average. So was today just a head fake? I found today interesting. Yesterday's move higher, that wasn't surprising because it was the first trading day of the month. And I've shared with our subscribers numerous times that the way institutions work, and when people are putting money away in IRAs and 401ks and it goes into mutual funds or whatever investment company it goes into, typically that money goes to work on the first trading day of the month. So whatever has come in throughout the month, then the managers put the money to work on that first trading day of the month, because they have to, by prospectus, put the vast majority of what came in into the market. They can't keep it in cash, even if they're concerned with where the market is. By law, they can't do it, or by rule. And so the first trading day of the month is often an up day. So yesterday was not surprising at all, especially when we went up and hit 460. Today, a little bit of a surprise that we had some follow through today, especially with the fact that we're a tiny bit overbought. And this whole entire move has gotten a little bit vertical, and we still have these gaps that I mentioned in the last SPY recording that I don't like either. So we gapped up here, here, and here. And I just think that, yeah, you have to trade what the market's giving you, which is an upward move. But boy, I think you need to tread with caution right here. And perhaps we continue to power higher, but it would surprise me. The market surprised me before without some sort of a at least test back down towards the recent high here over in the beginning of September, come down towards the 10-day moving average, fill some of those gaps. Maybe it's a bit mind-boggling, I think, at this point in time. So as I said, the trend is your friend. That's been around forever. There's a reason for that. So you trade the trend, but I think you do it with caution. And it's a pretty interesting moment in the markets for sure. A couple other things that I wanted to show you. And if you're bullish, I'm going to show you something that probably would get you excited. It's the most bullish thing I can find in the market. First of all, here's the Qs. And you can see how we're moving to still a little bit overbought at this point in time. Maybe the market needs to rest for a couple of days, but a little bit of separation from the 10-day moving average there. Not quite as vertical on the Qs, a little more towards the 45-degree angle, which has more staying power. I like that better. The corrections tend to be not as severe when the market moves in a 45-degree angle. And we've broken this old recent wave 3 high. And so it certainly looks like the market wants to continue its move. The DMI is supportive, totally different DMI on the Qs than we have on the weekly chart of the SPY. And that looks good as far as a continued move to the upside. So maybe we don't need to correct the overbought condition first. We just keep powering higher. We are moving into a historically seasonably bullish month, but our time of year. But here, take a look at this. For the entire year, we've talked about this. The entire year, we've talked about, notice how it's labeled now. We'll come back to that in a second. But we've been talking about this whole year. Let me condense the chart so I can get it all in there, on how the IWM, the small caps, have stayed in this 210 to 230 range. So there was support at 210, and then here was the resistance at 230. Said, when is this ever going to break out? At some point in time, it will. And whichever way it goes, I think we could have a pretty sizable move in that direction. And if the small caps were to break to the upside, you have to look at that as a bullish signal for the market. For one thing, new leadership. They've not done a thing for the entire year, absolutely nothing. And with the Qs looking strong as well, if we get the small caps coming in, along with the Qs and interest rates calm down, we'll take a look at the TNX here for a second. Yeah, you certainly have a bullish case for the market to potentially move back to the upside. I just think short term, we're a little bit overbought at this point in time. But there you go. There's the breakout. Finally, and not the greatest follow-through day today. Yesterday was the breakout day. Not a great follow-through day, but we did finish to the upside. So we want to take a look at volume. We had good, solid volume yesterday. Tried up a little bit today, just a little below average. You would have liked to seen a little more follow-through with the volume too, to be convincing that this was going to move to the upside. But man, we haven't been here since June. And in June, we didn't have any sort of a potential follow-through, and it fell back to the downside. So if we take a look at the 10-day moving average, once again, a little bit overbought. So perhaps we need to come back down and test 230 and do that in the immediate future here before potentially moving back to the upside. We do have that 10-day crossing the 30-day. Another one of our technical signals. We have our indicator mastery class series. We post a lot of education on our website, EWOtrader.com. And one of the things that we did was do a deep dive in every technical indicator that we use in our supporting system that backs up and supports our Elliott wave analysis. And looking at a 1030 cross is one of the things that we look at, learn that from market makers years ago. But let's take a look and identify this DMI here and see if it's showing support. And not yet. You can look and see that, wow, that looks about as good as it can get from the two directional indicators, a vertical move in the positive, a vertically down in the negative. The ADX is moving up, but it hasn't broken above the negative directional indicator yet, and it hasn't broken above 20 yet. So we don't have that confirming signal of the breakout from the DMI yet. Now that could change in the next couple of trading days, but it's not there yet. And when you see something like that, always try to caution our subscribers that don't get caught up into thinking, oh, well, just in another couple of days it'll be there, and then you jump in, because often that ADX will come up to the 20 level and just roll over and come back down. You actually need the trigger, you need the full-on signal before you start putting money at risk in any sort of positions based on this breakout move. But yesterday was impressive, no doubt about that, in the small caps. And wouldn't be surprising at all to see come back and test the 230 level, maybe let that ADX break up just a little bit more to the upside. I always talk about how, man, that would be the ideal scenario, right? You give it a couple of days, let the ADX continue up, have the IWM come back and test 230. That's a great scenario for an entry. But the market doesn't always do what's ideal. And the market has its own its own mind, and it does its own thing. But that would certainly be something that you could look for as far as a potential trade moving forward. So that's pretty exciting as far as the potential for a move higher, even though we are just a little bit overbought short term. And it takes you back to, could this really happen? I mean, could we go to that 161.8% extension on the SPY? man, is this all the correction that we're going to get? That correction that we got on the SPY, just right here, moving down from a little over 450 down to 430. That's it. That's all we got. We're powering higher. Sure looks that way. So anyway, I've given you some things to keep an eye on over the next couple of trading days. Let's take a look at a few other markets. I mentioned that we need to look at the TNX, see if interest rates are calming down a bit and giving the market some room. The market did not like it when interest rates were powering higher, and that's exactly what's going on. So now you're seeing why we've been able to move higher in the markets, because interest rates have backed off a little bit. So they've calmed down. And it looks like we're creating a wave 4. The wave 4 has labeled. We've moved past the 23.6% label, which is a fib level. So that does label the wave 4. And that gives us some potential move back to the upside here towards that wave 5. But there's several levels to go, right? We could go down to 50%. We could go down to 61.8. We haven't even actually hit 38.2 yet. So there's some lower levels if interest rates do want to calm down a little bit. And boy, you can make an argument. Is that really bullish for the economy long term, that interest rates are backing off? Is the Federal Reserve doing something that we don't know about? Is this foreign money that's coming in as our interest rates got higher? Did that attract some more foreign money because we're basically the only place in the world that has any positive yield, even though our real rates are still negative? But when you see that the 10-year does have a positive yield, technically, there's a number of scenarios to discuss, debate on what could be going on with interest rates. But we did have a pretty strong move there from September to the middle of October. So basically mid-September to mid-October for a month there, interest rates moved to the upside pretty significantly. So a little bit of a rest is warranted. But what happens from here? That's going to go a long way. I think I've been saying this for a long time, is I think where rates go determines where equities go. And so you got rates backing off, market moved to the upside. When rates powered higher, market kind of got a little bit nervous and backed off. So watch interest rates. I've always said that if you want to be a good equities trader, you have to have a working knowledge of the bond market. You don't have to be an expert bond trader or anything like that. But the bond market is so important to the financial markets in general. There's so much money in the bond market, and there's a lot of really smart people in the bond market. So having at least a workable knowledge of bonds will help you become a better equities trader. And so I think that's something to continue to focus on. So there we go. Let's look at Bitcoin, and we'll get to a few of the foreign markets as well. And a bounce back. Pretty nice bounce back. And I know for those of you that are new, those of you streaming live on YouTube that are just joining us, I get it. I know that Bitcoin trades 24/7, but it's just a little bit of a blip, because we have to have something that gives us a starting and stopping point for daily charts, just like we do with the futures. And so you can see that Bitcoin consolidated that nice move to the upside. If you go back and look at our past recordings, Elliott Wave has absolutely nailed Bitcoin. So if you're looking for an indicator that can help you, if you're interested in trading Bitcoin, look at Elliott Wave, because it's been spot on for the entire year this year. I mean, it just uncannily amazingly accurate. And so this little bit of a pullback from the wave 3 has bounced back to the upside. We came down and we tested the 10-day moving average pretty well. We broke it here back on the 27th, but no follow-through day, back above it on the 28th. And then you can see we kind of bounced back to the upside a bit. So is this it? Is this the run? I thought, and I still think, we may consolidate sideways a little bit longer with the new Bitcoin ETF. And, there was a little bit of a buy the rumor, sell the news type of a thing. So perhaps a little more consolidation from this big move that occurred in October is warranted. So we consolidate this a little bit and then run up to that wave 5 high, or maybe Bitcoin has other ideas and says, nah, we're ready to go now. So we'll take a look and see how Bitcoin performs over the next couple of trading days. But the ADX really didn't give it too much interest today, although I've talked about this before. The ADX is a bit of a lagging indicator. The two directional indicators are more important as far as a day-to-day move, not more important in general. but they're more responsive to the day-to-day action in the markets. The ADX is very important. I want to be clear on that. It just takes a little longer. It's like turning a big ship out in the ocean. But the positive directional indicator moving up, the negative moving down, that looks good. And the ADX could turn and head back to the upside at any point in time. So when we're looking for things a little bit more short term, we like to bring the CCI in. That's a good indicator for short-term moves. And a really bullish sign here is it came down towards zero, didn't break below zero, and has turned back up. So that's a little bit of confirmation from the CCI on this move in Bitcoin. So looking at some of the foreign markets, as I mentioned, the XJO, take a look at that, see what's going on with the folks down under. And you can see a bit of a bounce today. So that's nice with the corrective move that's been occurring. And we came down, had this triangle breakout, really nice triangle, solid set of lower highs and higher lows, broke to the upside, went about as far as you would expect it to go, and then came back towards testing this breakout move, but then reversed today and moved back to the upside. And so you can see that we are above the 10-day moving average. In fact, we're above all the major moving averages, even though we didn't quite fully retrace that breakout. Maybe that's enough for now. And we move to the upside. If you're not sure what I'm talking about, when you have one of these Elliott wave corrective triangles, once you get the breakout, which occurs often, the breakout is quite often retraced, not always immediately though. So it's kind of the same thing with gaps. Gaps get filled, but not always immediately. Sometimes it takes a while before the gaps get filled. Same thing with the retracing the triangle breakout. Sometimes it's immediate. It breaks out and it retraces right back down to that point of the breakout. Other times it breaks out and then it runs for a while, and it's a bit further off into the future when it comes back and tests the breakout or retraces the breakout. So we didn't quite do it all there. So this may not be the full-on retracement. Maybe we're just in a bit of a zigzag pattern, because if you look at that, you can say, well, hey, that's a zigzag. And I could go to probably that bar and say that looks like the start of an A impulse. And there's our B correction. And that would give us a level up to 75.26 as far as 100% extension. You look at that B corrective move and you say, wow, that's a pretty significant correction. And it is, but it doesn't disqualify it. It didn't make it to 78.6 to disqualify the zigzag. So that's still in play. We could move to 75.26 on the XJO. And if it breaks that, then we would look at our DMI and see, is that showing any sort of support in this move for potential move up to 161.8? So the thesis is the same. We always work the same way. When you hit a level that's expected, can you go to an extended level? It happens quite often, but there's no guarantees. So when you confirmed it's supposed to go to one level and you have a high percentage of accuracy, but the extended level, then that's a whole new ball game. How do you know if this is going to be an extended level or if that's it when it hits its potential target? So we look at our confirming indicators to give us an idea of whether or not it's feasible for that to occur or not. So looking a little more bullish there on the XJO. And let's take a look at the Nifty, because boy, we were really hanging by a thread last time we looked with that 49 level. And look, it held. We broke it, but only by one day, no follow through day. And so we're back above 49. So what I've been talking about for those folks that are interested in trading the Nifty is, as long as it stayed above 49, you had to stay bullish, but be careful, because if we break above 49 due to the vertical nature of this move here, you could likely make a quick move all the way down to 47, because there's nothing to stop it there. There's no resistance on the way down from 49 to 47. But this is a perfect indication of why we talk about this as another one of our rules, that when you break a major point of support or resistance, moving averages, breaking out of triangles, whatever, you have to have a follow-through day, a second day, a confirmation day. One day can be a head fake. The market does that all the time to sucker people in, especially on the retail side. They happen time and time again. So you have to be just patient. Don't jump to like on the IWM, don't jump in yet. Yes, that's a pretty impressive breakout, Let's let the DMI see if it's going to set up and confirm that move. Plenty of move to go to capture a continued run if it goes. So same type of thing here is that we have our rules and guidelines. We don't just want to jump at a one-day move. So if you'd seen this break below 49, you might have been tempted to go, oh, I'm going to go short and trade it down to 47, but you never got the follow through day. Immediately the next day, back above 49. That's why those rules exist. All right, so one more that has been asked about was the DAX. So we wanted to see Germany's market. And you can see that we did move back to the upside there as well, even though we are in a 5-wave impulse pattern to the downside. We've got a wave 4 now at 54%. We could run all the way up to 61.8. If it breaks that, then you have to take a look at, well, maybe that's the end of this downward move and that this downward zigzag pattern could become disqualified. But we're not there yet. A 54% wave 4 corrective move is right in the wheelhouse of the strength. From 50 to 61.8, man, that is really strong from an Elliott wave Fibonacci standpoint as far as resistance, on top of the fact that you can see clearly all of the resistance that we have here at 34. So that's not going to break above 61.8 if we break above 34. So running up to that level, for me, and the way I look at this, if you want to be bullish on the DAX, you could say, yeah, well, we've missed a pretty good move. All right, well, that was a wave 4 correction move to the upside. But if you really want to be full on bullish, you want to see the DAX break above 34, or at least the ETF that tracks it break above 34. And then you could turn and become bullish as far as it moving higher, because if it breaks through that resistance, disqualifying a downward zigzag or a downward impulse pattern and breaking above all that resistance at 34, if it could do those two things, that would be an impressive move with a lot of strength. And I think you could have a pretty good run to the upside if that occurred. Look, the DMI, even with that nice move in the wave 4 correction to the upside there, the ADX is still below 20, hasn't gotten up towards 20 yet. So it's still not completely convinced. But, things could change. There is starting to get some separation there between the two directional indicators. So something to keep an eye on. I just don't think that you can jump in with both feet on the DAX just yet. So that gives you a brief rundown of a lot of the markets that we like to cover for our subscribers around the world. And so now what we like to do is take a look at a trade example that we sent out for our alert subscribers. And I will remember this time to go ahead and share a new screen. So I'll show you this screen. And this is exactly what it looks like for our alert subscribers. This is our website. Every single trade alert that we send out has a page exactly like this, where you can see that we have the stock symbol. Every trade has its own ID. What was the strategy? What of our portfolios was it in? How many contracts? What was the option that was sent out? And this was 2 contracts of the December 55 call. And then we also have a mark-to-market graph there that shows you every single day where that position exists. So basically with those mark-to-market graphs, you can see every single day where every single alert stands. So we're as transparent as you can be as far as showing you where the positions are. So the entry alert was sent out on October 20th. And so you break it down by clicking on the entry button. It tells you, all right, what was sent out. There's a little bit of reasoning that goes in with the SMS or email. It tells you a little bit about why we're sending it out, not in great detail, but a little bit of an idea of what's going on. And then we have a chart. And so here you can see that Sun Life wanted to be in the financial sector when the interest rates were running up, because when interest rates go up, the financials do well. I've mentioned this numerous times in the past that when interest rates go up, the spread widens, and that's when financials can make money, because financials lend on the short end, or borrow on the short end, lend on the long end. And so the difference in that spread is how they make money. And so as interest rates go up, the spread widens and allows them to make more money. So we wanted to be in that space. We've been in energy a lot with UNG and USO. You've seen those, but we wanted to be in the financial area as well. And so we broke above this resistance level. We had a target price of 58. And so then the exit alert was sent out And so that's the thing, right? With TradeFinder, we just find a consideration, then you're on your own. But with our alert subscription at EWOtrader.com, we send you out alerts for entries, any adjustments, and exits. And so we have all this information included for each and every alert that goes out. And then you can see what happened. Sun Life, SLF, went up and it hit the original price target of 58. Now note that that target moved to the upside because we stayed in the wave 3. But we originally had a price target, and when you hit that target, you need to be happy. You could look at it and say, well, the target moved up, let's stay in. And you could do that, but are you getting a little bit greedy when you do that? Well, in this case, you would have been, because interest rates stalled. So the stock kind of treaded water a little bit. But looking at this, you hit your target, you followed the original trading plan, and you were able to enter or exit the position with a nice just under 40% gain in 6 days. So less than a week, made over 35%. That's a pretty good trade. Happy with that. It's time to move on. So I wanted to show you that. We do that each week and give you an idea of what our alert subscribers, if you've ever thought about becoming a subscriber, love to have you for our alert service. So let's get back here. So let me go back and share the screen back here. And we'll take a look at some of our past case studies that we found here in TradeFinder, and then we'll look for one tonight, and then we'll open it up for questions. So going back to 824, see that, and this is one that I've talked about this, if you've been watching this, we had this alert back on 824, so that's going back to here, and it was moving to the upside, and then prior to earnings, there was a report from a short seller that said, hey, watch out. They're in the same space as Smile Direct, and they had a bad earnings report, and be careful. And so, you know, it's so self-serving when it's a short seller that puts out a negative report or a concerning report, and the stock went down. Well, Align Technologies had a great earnings report. And so look what's happened. It's turned around and run right back to the upside. So that's when you shake your head and say, man, these ulterior motives, how do they get away with doing stuff like that? So it's recovering, it's coming back to the upside. So at that point in time, or this point in time, it looks like, hey, it may run back and hit that wave 5 target after all, when after the drop, it looked like a slim chance that it ever gets there, but it's turned around in a big way in a short period of time. So here is Camping World, and it was breaking to the downside. It did find support. It tried to break below this support level, which would have been a big move lower. And this is one of those that I've said, hey, I don't really get this. You've heard me talk about this numerous times if you've been with us. You know, these big old huge campers, oil is going up, so it costs more at the pump. And as far as I know, Elon Musk hasn't created a motor home from Tesla yet. So you got to put fuel in these things. And with interest rates moving to the upside, it's going to be more expensive to finance them. So I didn't understand why that current economy wasn't taking more of a toll on the stock. And it's bounced back to the upside, but that's because there's an earnings report on the horizon just a couple days away. So this is a bit of short covering moving into the earnings report. So we already have a strangle on it. So let's just hold it through the earnings report, see if that generates a big enough move to potentially break through resistance up here around 44, or if that breaks it down through support at 36. You know, in general, the auto industry has been great, but can you lump those big, huge, massive campers and motorhomes into the same block as autos? I guess we're going to find out. We'll see from there. Looking at bots, this one was back from 914. Here's another one very similar to Align Technologies that had its break, but it created the wave 4. I mean, they got to do it at some point in time. So here was the start, and it made us break down to the wave 4. So it created a wave 4 right around the 61.8% level and has been powering higher ever since. So it continues to move back to the upside as it's looking to hit its own wave 5 target. Now, when you take a look at this next one, CPLG. Now, I talked to you about this one last week and said, hey, we haven't quite made that 10% move yet. At some point in time, you're going to want to take your profits. But we have now. So I'm crossing this one off the list. You can see the move higher here, and from 15, now we hit 18 2 days ago on the 29th. with this big jump to the upside. So that's it. That's it's made its move. You've had more than a 10% move, almost a 20% move now. So if you're still holding this, you're just being greedy. So let's go ahead and cross that off as a winner, and we'll move on from there. Then we have info, and this one was originally a bearish position. We had this one as an alert for our subscribers, and so we have reversed that into a bullish position. So we made an adjustment there, and we'll see if that one can continue its upward move. Now, the DMI was looking awfully good a couple days ago, and it's not looking as good now. So we've had a bit of a pullback to the 10-day moving average, as you can see here, back to test that green line. We'd gotten just a bit overbought a couple days ago. So we've traded right down to it, but closed above it on the past 2 days. Don't like the positive directional indicator moving down, but the negative directional indicator is moving down as well. So even though maybe the buyers stepped away a little bit, sellers didn't come rushing in. So from that standpoint, it still looks okay for this one to continue to move to the upside. Next, we have TXRH, which was a strangle on Texas Roadhouse. And so look what's happened the past couple of days there with some volatility. And so we'll see if that can move the stock to continue one direction or the other. So let's go back on the 12th is when we looked at that. We wanted to have some strangles with where the market was. And I think this was a good move to look for a position like this. There's our symmetrical triangle. And then from here, we broke to the downside. Crazy last 3 days in this stock. Wow. I mean, look at these moves. It's not much in the end in the net, but the intraday moves are insane over the last 3 days here. And we look like we're getting ready to continue to break to the downside. That would be great if it did. Stocks usually move lower faster than they move higher, as you're well aware. So when we put on the strangles, even though we don't care what direction they move, we say that we don't care. But let's be honest, if you had a strangle, so you've got a triangle pattern, and you got to pick a directional move, you're going to pick the downside because things just tend to move down faster, and you can make your money quicker that way. In the end, we can make money whether it breaks to the upside or the downside. So from that standpoint, we don't care. But if we could pick, and it sounds, counterintuitive to wanting everybody to make money. If the market moves to the upside, then people that are putting money away for retirement plans, IRAs, 401ks, et cetera, everybody does well when the market's moving to the upside. So we want to root for that. But from a selfish standpoint, if you have an individual strangle on, you're going to root for it to move to the downside. So we'll see if that continues down from here. It's already down, a few points because the midpoint was at 92 and we're down to 87. So that's a pretty good move already. We don't need a whole lot more out of it if we get just a little bit of follow through there. And then last week, we looked at the XLF because on our search, there was so many financials. They say, well, instead of trying to just pick a financial, let's trade the whole sector. And so we put this bullish position as a case study consideration or a bullish position. We don't pick one, you guys pick it. But look what's happening here. This little triangle. Remember, Elliott always said, pay attention to the small triangles too. They matter. We look at the big ones for our volatility portfolio with those strangles, but little triangles break out just the same as big ones do. They just don't move as far, but they still have the same exact characteristics. When you look at the DMI, you can see that it still looks pretty good considering we've gone sideways for a week now. Pretty much since we looked at this last week, it's gone dead sideways, a little bit of a pullback and then sideways consolidation, but the DMI has not weakened that much. So does that mean that some people feel that rates are going to start moving back to the upside again and the financials are going to do well? They'll need rates to kind of come out of the doldrums and start moving higher. And if they do, what does that mean for the rest of the market? That isn't going to be good for tech stocks. So that could hurt the Qs, but the IWM could resume or overtake and become the new leader moving forward, which we talked about waiting for that for so long. So anyway, that's our past case study considerations. So now we'll go ahead and see if we can find one for tonight. And then with whatever time we have left, we'll open that up for questions. Now, if you're new and haven't seen this software program before, this is called Profit Source. It's created by an organization in Australia called Hub, HUBB.com. You can find out more information there. And to me, it's the best Elliott Wave software that exists. I've tried all that I know to exist. I'm not going to say I've tried them all because there may be some that I haven't tried. But one of the things that I like about Profit Source is it is programmed exactly to Ralph Nelson Elliott's algorithm, his own mathematical algorithm. The reason that I highlight that is there's a number of Elliott Wave programs that are personal adaptations of Elliott's own algorithm. So they've found some things that they look for on their own. And so they've programmed those in. And if you're not following what they're looking at, et cetera, you get the drift there. I don't know if it can be as effective for you as it is for them if you're not in their head, so to speak. But regardless, I really like this program. The charts are clean. Everybody always gives positive comments about it. And if you happen to be an alert subscriber with Elliott Wave options, they've added this tab here. Since I use it, a lot of our alert subscribers have been using it as well. And you can see that there's some search parameters here that are pre-computed. One of the cool things about it is you can program your own searches. If you have your own set of confirming criteria, technical indicators, whatever, we share with you the ones that we look at, but perhaps you have your own that you have confidence in and are really good at. You can create a search on your own and then you run the search. It takes a little bit of time to run the search, but when you have these pre-computed ones like this, they show up automatically. So you only get these if you have Profit Source and are an alert subscriber. But you can see these ones that say EWO on those. Those are mine. Those are ones that I created within Profit Source, and we share those with our alert subscribers so they can see exactly what I'm looking at each and every day. So if we take a look at this impulse, holy cow, 10. So what we've done is we've whittled down the universe of thousands of potential optionable stocks down to 10 that follow our technical indicators. So what we did was we created a system of these confirming technical indicators. That's what these results are. And then we go from there to look for Elliott Wave patterns to see if they complement or not. And so at this point in time, we would know if there's a good Elliott Wave pattern. If we're only looking at these stocks, then we know, hey, they have good supporting technicals to go along with it. Now notice that where last week we had so many financials, I don't see any of them on there now. And there's FND, which we looked at in the past. So it's kind of starting to move back to the upside again, following its downward move. And man, that looks pretty good. I got a feeling we're going to find a couple that look pretty good. I still say that you have to proceed with caution, but again, you trade what the market gives you. One thing that makes me a touch nervous on this one is it is a little vertical. Something else that's interesting that you've probably already seen before I get to it is there's a zigzag there. So let's this one actually turned out to be a really good one to show from technical standpoint. Look at that triangle right there. See the triangle? And what happens from a triangle? Breakout. And so we can start our zigzag pattern from the point of the breakout. And there you go, like 38.2% breakout. Look at that. 61.8 is the target. Man, you can't make this stuff up. And the high of the day, right at the 61.8% level. And look where it closed, way back down. Now, it was overbought. So you can see that we had gotten away from, there's the 10-day moving average right there. So on the high of the day, yeah, we were pretty far away. So we were overbought. But how interesting is it that it touched the 61.8% level on the high, and then that was it, and it backed off for the day. So here's where we would look, okay, what are the chances that it goes to the 100% level? Well, if you look at this DMI, you'd be hard-pressed to find a better-looking DMI than that. So that's supportive that, you know, once we consolidate this slightly overbought condition, there's a great chance that this is going to 151. And then, you know, we'll look at it again and see if it could be going up to 161.8 at the 163 level. But right now, you have to say, yeah, there's a great chance this extends past the 61.8% level up to, so that's going to be a tough one to beat. But let's go back and look at a couple others before we make a determination for this week. FAST, seen that actually on the list a couple times this week. And so here's wave 5, 111% extension. Man, all those indicators look good. Let's highlight out the DMI. And one thing that's interesting here, I don't know that this looks better than FMD, but you can see that there was major resistance there at 56, which we've broken above. And so, yeah, this one could run from this level. We're not really overbought. Tap down near the 10-day moving average on the low. That looks good. CCI is in the upper threshold. It looks good. And shaken money flow, which is another one of our indicators, is moving in the right direction, giving you confirmation on the money flow. So that looks good too. So both of these are looking good for potential continued moves to the upside. So keep an eye on those. Two good candidates for our case study consideration of the week. And then we have a couple now starting to get some retailers in, right? We're getting into the holiday season. We start looking at those. And so we'll take a look. I want to look at NVO just from past history, but let's take a look at these two retailers. 5 below, looks like it's resurgent. So let's see what happened here. Well, we're still in, now this is interesting because we're still in a wave 5 pattern to the downside, but it looks like we could be getting ready to disqualify that pattern. And if you look at the DMI, basically that triggered today. I would say that ADX did just barely cross above that line at 20. There's the positive directional indicator. There's the negative. So we're moving to the upside. I think that looks really good. And so I think there's a great chance that this wave 4 continues and to the point where it's disqualified. And what happens then, if you're wondering, and that's one of the beauties of Elliott wave, is when a pattern becomes disqualified, you have a great idea of where it's going to go from there. Because if it becomes disqualified, then there's another set of rules for what happens then, which have an even higher percentage of accuracy than the original rules, which I don't know how many indicators can say that. But the idea would be, if this continues higher, disqualifies the wave 4, because we still have a little gap here that possibly we're just going up to fill that gap. So we'd want to watch that. But if it can break above that level, then we're likely going back to 240 and retracing this entire wave 3 impulse to the downside. So the gap there, that makes me a little concerned of, is that all that is? Is it just closing that gap? You can look at the DMI and says, yeah, well, the DMI says that, hey, this trend has some strength and is likely to continue. And then you have the seasonality aspect of moving into the holiday season. Those are all positives, but I don't know that this one overtakes one of the other two that we've looked at as far as the quality of the chart. Let's look at Ollie's bargain. I always call it Ollie's bargain bin, but it's bargain outlet. But you look at this and see what the Elliott wave pattern is here. Same thing, wave 5 pattern to the downside, and we've corrected to the wave 4 right at the 38% level. Hit it yesterday and then backed off today. So yeah, that makes you a little bit nervous as far as a long way this one could still go to the upside and stay in a wave 5 pattern lower. So I don't know. I mean, the ADX has curled back to the upside. We have separation between the two directional indicators. So perhaps this one's going to run as well. I don't like the idea of being at a 38.2% fib level, facing a little bit of resistance here. No doubt that there was a decent move yesterday. Money flow looks good. We can see the CCI. That looks okay too. So perhaps this one continues to run, but I think I would want to see just a little bit more of an upward move here before I would get too excited about that. And this is kind of one of the things where, why would we pick one of these two when the confirming indicators are showing that there's some underlying strength, but the Elliott wave pattern is not there yet. They're not in concert with each other. They're not correlated, if you will. So wouldn't it make more sense to pick one of those FND or Fastenal that are in upward Elliott wave patterns when we're looking for a potentially bullish move, rather than hoping that a downward Elliott wave pattern becomes disqualified? Does that make sense? You know, I think you have a higher percentage of accuracy if you're putting your bullish confirming indicators together with a bullish Elliott wave pattern, rather than again hoping one becomes disqualified. So FAST looks really good, and FND looks good as well. So yeah, just a little bit overbought right there. I guess we can just write both of those down. Been trying to get away from that because for a while we started getting a little bit crazy and started looking at 3 or 4 per week, and that's not the idea. We're trying to keep this to 1, but both of those look so good. We'll go ahead and do a bonus one since it's the first week in November. So we'll look at FND as our official case study considerations for the week, and FAST. So both of those moving to the upside is our that's our setup for this week. And again, look for earnings out of Camping World. We'll see what that does. See if Texas Roadhouse can continue to move to the downside. We may wipe off a few more of these over case study considerations before we get together again next week. All right, so got a few minutes left. Kind of ran a little bit long on the markets, but I think we have John. Are you with us there, John?
I'm here, Rob. How are you?
Great. How are you? How are things down under?
How are you? Things are good. We seem to have quite a lot of symbols to take a look at. So I'll keep sending them through to tell me that you've had enough.
Okay.
All right. Well, I'm going to start with one from Chuck, who's watching on YouTube. And there's also a couple of people on Zoom here that are interested in Visa.
All right. Let's take a look. And yeah, moving to the downside here, but you wonder how long that can last again, right? Because of the time of the year. If you look at the DMI, man, it looks like this wants to continue lower for a while. Now, for those of you that are new, I'm not as big a fan on the DMI on downward moves as I am on the upward moves. It's just the reason, if you're wondering why, because the DMI, and that's why we have the CCI and some other indicators that are quicker and more responsive. The DMI is a touch more of a lagging indicator, and the 2 directional indicators are more responsive, but in general, it would be considered a lagging indicator, meaning that it wants the information first. So by the time you identify a downward position, because things can move down so fast, by the time you get a really clear-cut signal on the DMI, the move could be over. Are we at that point in time? I don't know. It's trying to find some support at 210, but it was also oversold back on the drop from the 28th. So it is a bit interesting, isn't it, that moving into the holiday season that you have something like Visa that seems to be struggling a bit. You'd think, all right, this is the time for it to turn around. Well, maybe this is the calm before the storm, or maybe this is just, a bit of a setup for a turn back to the upside. But we do have this gap here, which needs to be filled. So that's not, whether or not you're a big fan of the DMI on the way down or not, that's not what you want the DMI to look like if you're expecting the stock to move back to the upside. Now, it does not have a 5-wave impulse pattern. That's why there's no numbers labeled on the Elliott wave pattern. And we could potentially be looking at a downward zigzag here. Yeah, I mean, it doesn't have to go much lower. So the target on the downward zigzag is at 205. So what today's low was 207. So that's only 2 points before it hits its target. So that's not really helpful there. Let's look at the CCI. Now the CCI is getting to the point where you're saying, all right, well, maybe we are a bit overdone to the downside. And that's an extreme point low is what that point here is. And again, that's when you learn the indicators. With the CCI, what's happened historically matters more than the scaling over on the right. So you would look at this and say, okay, well, typically it finds lows kind of in that area. And then recently it had a low there at minus 200. That's getting kind of down towards a normal lower threshold, and where it's starting to look like it wants to turn around. And this time we even broke that, broke below negative 200. And it's just showing you that it's oversold right now. It's basically what the CCI is saying. Now, is it a potentially bullish pattern to the upside? Not yet. Could you try and trade an oversold bounce? Absolutely. I think with the gap up there, the fact that you've almost touched the 100% extension, so the zigzag target has almost been hit, and the CCI is so oversold, I think you could make a case for, if you wanted to put some sort of a trade on there, you could. You can see that the CMF is really negative, but what would change my mind there is if you broke through that 100% extension. If you broke through that and followed through with it, well, then you could be clearly looking at 161.8% extension. But it would have to break 205 with a confirmation day, with the CCI being that low for me to see that, because the money flow could turn around. But it's a cautious thing. This would be a speculative trade, and we try to identify which ones are, confirmed by our indicators and which ones are speculative. And I would say that if you wanted to be bullish on Visa, that's a speculative bullish trade. If you wanted to be bearish on it, I don't think you can get in right now, but if you saw it break that 100% level, then you could trade it down to the 161.8 if you were looking for a bearish trade. Okay, next.
Thanks, Rob. I'm just going to give you a commodity. We've got a request for you to have a look at aluminium. I've just been having a look, and I think probably the continuation chart's the best one to look at. It's AL-spot V.
All right. What did you call that again?
Oh, the continuation chart, just where they roll.
No, the name of the metal.
Oh, aluminum. I apologize.
I don't know who's right, aluminium or aluminum. Who knows which one's the right pronunciation? But when I first heard you guys say that down under, about fell on the ground laughing. I don't know what the hell you were talking about.
It's an old debate. Let's not get into it. Tomato.
Okay. All right. So AL, I'll leave it at that, as a pretty solid wave 4 at this point in time. 31% level, but also at a support level, because it was resistance going back into July and August. And I probably was a little bit oversold from the looks of the move there, and it still is a little bit oversold. So staying here around 2,700 level, if it could hold that, you could potentially get a bounce back to the upside. Wave 5 target it's way off in the distance, and it's up at 3,700. So I mean, there's a potential move there, but man, you'd have to be patient based on that prediction there. And that's called a tap box there, time and price prediction or projection. So the projected level there would be a bit far out in time, but you had a pretty vertical breakout move here from this triangle. So there was a triangle there, broke out pretty vertically. This is why I don't like vertical moves, because what goes straight up quite often comes straight back down. And that's what happened there. In fact, it not only retraced the breakout, it paused there for about a day once it finished retracing the breakout, and then continued all the way down here to this level down at 2,700. So I don't know if we have much more to the downside there. Let's see what our indicators say. The DMI is even starting to show that, the strongest part of the downward move is over. CCI is low. That's an extreme point low again. Same thing I was just talking about. You can see all of these levels here is where it normally finds a bottom, and it broke that. So a bit more oversold than normal. And not the greatest looking money flow, but Here's another one that if you wanted to take a speculative position, you could try moving, put on a bullish position here. There's got all kinds of, yeah, you look here, if it breaks where it is now, it finds a lot more support not too far away. So this, if you had just a little bit of a patience here, like, all right, even if it breaks that level, it's got more support here at 26, somewhere right in this area, could be a good speculative trade. And then you add in the fact that it was a pretty vertical move down. So maybe a little bit of an oversold bounce is in play here as well. So another one that you could take a speculative look to the upside on.
Thanks, Rob. I might give you one from Leon. He's asked if you could have a look at SPG, please.
SPG. Well, nice day today. I'm guessing that was an earnings report with a big gap to the upside today. Typically, I'm not a huge fan of these REITs, but this one, Simon Properties, is malls. So you can see why at this time of the year that could be, I mean, are there any malls? I guess there still are some that exist, but had a bit of a triangle there. Nice breakout. So you're thinking, okay, we've run about as far as we're supposed to based on the size of the triangle. And then boom, big gap to the upside, which is the biggest negative that I can see here, is that on this move today, it was a gap higher. Really nice move, 6.5% on the day. I just hate the fact that it gapped up and now we're overbought. There's too much separation for my liking between where it is and the 10-day moving average, but that was a really strong move. If it consolidates that a little bit and allows that 10-day moving average to catch up, then based on the strength of that move, I think that you probably, I mean, yeah, the DMI even looked good going into the earnings report. See that? Or whatever happened today, but it looked good going into today. And it still looks good and it's still got room to run. It's not by any way, shape, or form showing that, hey, we're overbought. We're not in an extreme point on the CCI either. And money flow is as good as it can look. So, yeah, I think just maybe but it could go up again tomorrow. But at some point, it's going to have to come back towards that 10-day moving average. So what happens if you're new or streaming and you haven't seen this before is when you get separation between where the equity or the security is and the 10-day moving average, one of two things happens. Either the security is going to come back down towards the 10-day moving average, or it's going to go sideways and allow the 10-day moving average to catch up. That's what happens when there's separation there. So could it go a little bit higher first? It could, but extreme overbought or oversold conditions don't last very long. They can last a little while, but they don't last very long. So I don't like the gap and the fact that it's overbought. But once it settles this in and maybe does a little backing and filling here from this big move higher, I think you've got a great chance of hitting that 170 level, and then we'll see from there. But yeah, thanks for showing that one. Interesting chart.
No problem. One question from Kerry, and Rob, I just wanted to point out there's quite a number of EWO subscribers on here, and they're asking quite detailed questions, and I'll just hold those for Thursday night for your insiders meeting. I'm just going to give you a few more codes so we can get through them a little bit more quickly. So Kerry's asked if you can have a look at Home Depot, please.
And Home Depot is back to its 10-day moving average. I think we looked at this one last week too, and it was just a little bit overbought, separation from the 10-day moving average. Well, it's accomplished that. So for those of you that heard what I just said, this is what happens, right? One of the two things happens. Either it goes sideways, which this one did both, right? It went sideways for a while. And let's just go back here and I'll show you that once we got up there, so now we're separated, too much separation from the 10-day moving average. So then it goes sideways for a couple of days, lets that 10-day moving average start to catch up, and then just comes back down and touches it. And it does that for 2 days in a row. That's exactly how an overbought condition gets handled. So perfect illustration of what I was just talking about. And so now we have to figure out, all right, is this the start of the wave 4? And by the way, when it shows this, again, this is a projection. This does not mean you're in a wave 4. This is saying if the wave 4 were to label, this is a point where you could expect it to find support. But there is no labeling of the wave 4 yet. So these two are just projections of potential price movements. So let's look at our indicators, and the ADX is hanging in there. It's a bit overbought, but it's hanging in there. But the positive directional indicator has crossed below it, although the negative directional indicators moved down as well. So again, not a lot of selling pressure coming in, just kind of a buyer strike, as they like to call it. The CCI is moving back down towards 0. That could be healthy if it wants to make another run. And the money flow is pretty solid there too. So perhaps we're just consolidating this last move before it gets ready to make another move. I don't see anything that's too concerning yet as far as moving back to the downside. The most negative thing that I could say is this move here was just a touch vertical for me. I would have rather seen it more a continuation of that move right there and stayed in that 45-degree angle zone. I would have felt a lot more comfortable about it continuing to power higher. But it's doing what it's supposed to do. When you get overbought, you go vertical. It's backing and filling, exactly what I was just talking about. So I think I'd keep a close eye on it. If I was bullish, I would stay bullish, but be cautious again.
Thanks, Rob. I just had a question from somebody on YouTube asking if Elliott Wave works for Forex. And I think a good answer to that is that it works really well because there's more liquidity in those markets than anywhere else. And another question from YouTube is, can you have a look at BAC, please? It's from Dandowd Trading, wondering if there's an opportunity for puts.
What was the symbol again? Sorry.
BAC, back.
Oh, Bank of America. Okay.
Yeah.
And yeah, by the way, I'm 100% in agreement with you on Elliott Wave and the Forex. And what John said is spot on. The more liquid the issue, the better Elliott Wave works, because that's really what it's doing. Is it's examining the behavior of the masses. And so the more liquidity, the more accurate it becomes. A lot of liquidity in Bitcoin. It's been super accurate there. And so we know that we like when we see patterns on the more liquid stocks. And as John said, there's nothing more liquid than the currency market. So it's fantastic for I know a lot of Forex traders that are big Elliott Wave guys. So Bank of America looking for a bearish thing. I think I'm going to go back to, it's consolidating here just as interest rates are. And I think what happens with interest rates is going to go a long way there. If interest rates break down, which they could, we showed the chart. I mean, there's a potential of a breakdown, then yeah, I think you've got a bearish trade here, creating that wave 4. But if interest rates move back to the upside, I think that wave 3 likely continues. Looking at the DMI, the ADX is strong. It's not super overbought yet. So the negative direction, there's not really a lot of selling pressure coming in yet. This looks to me as more of a pause. And then when you look at the CCI, that looks okay. Money flow looks, I don't really see anything that's negative there, other than for me with the financials, you just got to watch rates. And if the rates break down and start heading lower again, then yeah, perhaps at that point in time, we create that wave 4 and have a little bit of a corrective move there. But right now, I think it looks kind of happy to be status quo. I don't know. But there's a gap there that's going to need to be filled at some point in time. So we'll see how that plays out. But doesn't look overly bearish to me at the moment.
Thanks, Rob. And Don is asking if you could take a look at Southwest LUV.
Always got to like their symbol. Yeah, and I've been talking about, I know that it was a big splash when Warren Buffett took a big position in the airlines and stuff, but what an industry. I mean, they have just to feel so snake bit that as soon as we get past some of the COVID stuff and things are starting to lessen from that standpoint, at least a little bit. Then they get nailed with a double whammy with increased fuel costs, and that's their biggest cost. So they're struggling to find people to work, and then they've got higher costs. So it must have been a really difficult time to run an airline over the past couple of years, I can imagine. But it looks like perhaps we might have tried to bottom here with the wave 5. It didn't quite hit the tap box projection. It does a pretty good bounce yesterday, and you have a little bit of resistance here that it's trying to fight its way through, but it's only the start of it. There's even more here moving through there. So when you take a look at that, then yeah, it's got some work to do if it's going to turn back to the upside. It's got to get above 51, 52 there, I think, if you're looking for a potentially bullish trade. Could just be, pardon me, a bit of an oversold bounce here at this point in time. But it is impressive that it moved back above 48. So, I mean, that's the most bullish thing. Let's look at the indicators and see if they're showing any signs of turnaround. I didn't think the DMI would be with that big of a move down. CCI is, and the CMF are both showing that, hey, maybe we're turning around here. But for me, you got to get back above 51 before I would be interested, because there's just way too much congestion between 48 and 51. So a lot of things could happen through this area. It could bounce around like it did in July, August, and September. So that's a tough one.
All right, thanks, Rob. We're getting well over time. How are you going there? How's the voice?
Well, as you can hear, and I apologize to people for the cough. Let's do a couple more, and then we'll wrap it up.
All right, one of your favorites, GME, is a request.
Holy cow. Well, at least I haven't heard it for a while. Well, I mean, you got to be impressed with the breakout over the past couple of days, right? It's not in a 5-wave pattern, and that's because hopefully everybody can see this. I'll take the moving averages off so you can see this big triangle that we had here. And that's what's supposed to happen out of a triangle, is a breakout move. And clearly there's your triangle, pretty nice set of lower highs and higher lows, and it's breaking out, and it had a good follow through day today. So broke out yesterday, follow through day today. You have to respect that. It should be about let's call it 150. Wow, that's a 70-point wide mouth of the triangle. So from 180, I could potentially go as high as 250 based on that. But, once you break out like that, then we just are a touch overbought at the moment right here. A little bit overbought, but yeah, that's an impressive. Let's see if there was volume behind it. That's another thing. Yeah, there's good volume behind it. Not, it's got a long way to go to get back to average, but it's just been in nothing for a very long time before all this craziness happened. But tiny bit overbought on CCI, but not horribly. And you got money flow moving back the right way. I don't know. It kind of looks like it wants to go on another run. It really does, as hard as that is to imagine. I don't think we're seeing anything like this, like June, but who knows? The volatility in this stock is unreal. But be careful if you're trading options, because that volatility can bite you. You can be right on direction and lose money if it slows down. It's got to stay moving at that kind of vertical nature if you're going to buy in now. But you risk, like if you don't, then you risk it getting away, right? You risk one of these things here where it goes up so far so fast that by the time it gets really overbought, the whole move is over. So that's what makes this so hard to trade. I mean, I've looked at it numerous times, and the options are they're difficult with the way they have them priced. It's priced for perfection, he tried to say. You got to get it right. You got to get it dead on to trade options on these. But it moves, no doubt about that. It's going to be interesting to watch that one, see where it goes from here. But pretty impressive breakout, no doubt.
And Rob, another that quite a few people have mentioned today for probably obvious reasons is Avis, symbol CAR, C-A-R.
Yeah, it's just, I don't know what to do with when you see something like that. You know, it's such a massive move that it destroys all patterns. So it's fun to look at. It's great, interesting, you know, fun to talk about, etc. But from a technical standpoint, I don't know how you can make any sort of a call on what happens from here, because it's just such a crazy, wild move that occurred. It blows out all the technical indicators. So I wouldn't even really want to put them on. It just there's really it's a to me it's a toss of a coin and what you do with that from here. But that's a pretty wild day. Thanks for showing that. It's a fun one to finish on. So we'll go ahead and wrap things up. Thanks everybody. If you didn't get to your question, apologize for that. Please understand that your questions are all important to us. We have a limited amount of time, and it went way over on time as it is. But I did want to get to some of them, as many as possible. So thanks for watching. If you were on one of our live streams, appreciate that as well. To our subscribers, thank you as always. I end off the same way every time, that time is the most valuable thing we all have, and we appreciate it when you spend some of your valuable time with us, and we do our best to make it informative and educational, and I hope you found that with your time tonight. Thanks again. Look forward to talking to you again next